Welcome back, everybody. You got Will and I-Man here from the Block Runner, and today we're going to be talking about Mirror Protocol, one of the more interesting synthetic asset protocols out there. The counterpart to this is actually a project called Synthetics.
Yeah, we
So,
covered it like I don't know how long, maybe 2 months ago or something, 3 months ago.
yeah, Synthetics, yes.
The segue into our whole exploration of derivative products and stuff like that, like the
Yeah.
next big DeFi sector for Ethereum. So we've already been through most of them at this point. So now the next thing is like I don't know, we're in a weird part of the market where it's hard to identify where the next hype cycle is going to emerge. You know
Hmm.
what I mean? Just because we've seen it all, we've talked about it all pretty much at this point when it comes to Ethereum, at least. What I did personally is I started thinking back to 2017 of like trying to like revisit that old these old narratives that I remember back then. And one thing that I recognize is, you know what's been largely missing up until this point in this cycle, it's the Asian community.
Hmm.
That was I remember, dude, towards the tail end of that last bull cycle, they were like the big driving force to a lot of the big narratives that we were seeing being cooked up in
Yeah.
the space. It
Yeah.
was it was mostly like, who's going to be the Chinese Ethereum or the Chinese Litecoin or the Chinese whatever,
Yeah.
right? Because I mean, dude, China is a mega population, right? They're very technologically advanced. So at what point are they going to like release their big products? So that's what Binance was. Binance was the big platform that captured that whole audience.
Hmm.
So now we have Mirror. I don't know if we've 100% confirmed whether or not this is like more targeted towards like an Asian demographic. I don't think so. It's very much like a decentralized protocol,
It
right?
is. It is. It's basically for everybody to gain access to assets that are not readily available in your jurisdiction, if you will.
Yeah. But the reason why potentially the narrative could form around this is because of like the native blockchain that is built on the Terra Luna blockchain, which we haven't gone into yet, which we will in like a later day.
Yeah. Which
But
which is
I'm
only an
thinking,
$8 billion
yeah,
market cap.
yeah, exactly. This change just kind of came out of nowhere. But I'm starting to see a lot of indicators that we're at that crossing point where Ethereum is kind of like this has already showcased and displayed everything it has to offer.
Yeah.
I think the market we've already gone through those hype cycles. We recognize DeFi is the shit. NFTs are awesome. So like, what's next? You know
Yeah.
what I mean? So we're at this weird like limbo phase, and I think the next based on the last cycle, the next thing to take off the market was the Asian market. So
Right.
we need to kind of like front run that and understand that and start to make our predictions based off of that.
Yeah, so
I
let's
think.
make some correlations between what happened in 2017 and what's going on now. So back in 2017, there was an understanding that Ethereum could not scale. At the time, there was high gas prices, not as high as we've seen now, right?
Yeah.
At the time, high gas fees were like $8, $10.
Mhm.
Now we're seeing like $80 gas fees.
But
And
because of that mass understanding, and there really wasn't much to use Ethereum for back in those days either. There were no real protocols, but it was still understood. This was the dilemma Ethereum was facing. So the hype was kind of circling the solutions to that problem.
yeah,
The next gen blockchains and Neo, the Chinese Ethereum.
Neo,
You know,
Tron.
yeah, all these things like that's the narrative started forming. And I remember, man, like towards the tail end of 2017, Ethereum was largely like ignored. Just kind of like it wasn't sexy anymore.
Yeah, yeah.
Well, sexy are these next gen projects. And obviously during the bear market, it proved to be completely like what's the word I'm looking for? Like
It was
just wasn't
fluff. It was fluff.
total fluff. Yeah, the bear market proved it was bullshit all along. Like Ethereum was the harbor of all the innovation.
I remember two distinct narratives. It was blockchain, not Bitcoin, right? That was one. And then the other one was blockchain 2.0, projects that were better than Ethereum.
Pretty much, yeah.
Yeah.
Yeah, it was largely a sentiment of like who like let's kill Ethereum,
Yeah.
for whatever reason. You just wanted to kill it and
I think
start
it was
over.
a headline grabber for new projects.
It was. And people gravitated toward it. I think that's what kind of like catalyzed this whole like tribalism that we see in crypto, like even today. Like people can't seem to want to cooperate amongst these communities. We rather just dominate and crush. I don't know if that's
Yeah.
like a if that's more of a reflection of our nature or what,
Well,
but
think of it this way. You know how we have a little bit of exaggerated titles for our videos?
Yeah.
I think projects, think in the similar format. They want to capture eyeballs to their project and say, look at us, we're the Ethereum killer. And then of course you get the clicks.
It's true, man. And it totally worked. Yeah, like in 2017, largely the narratives were like Ethereum something, like some variation of Ethereum, because everybody witnessed what Ethereum did. It went from $1 to $300 or whatever in
Mm-hmm.
like a couple of month time span. So everyone was actively looking for the next Ethereum. So yeah, from a marketing perspective, it made sense to label yourself as the next Ethereum in whatever way that you're advertising.
Yeah.
But now I guess DeFi is that thing. Like we've all witnessed DeFi and NFTs explode, right? And I feel it feels like they're kind of like these markets have exhausted themselves. So I think the new narratives we're going to see start to get formed are like it's just like different variations of what we've already seen.
Yeah,
Like
basically use DeFi on this chain without any gas fees, right? Our gas fees are 0.0000, whatever.
yeah,
And
yeah, or like that metaverse thing you guys like so much on Ethereum, Decentraland, Crypto Voxel, Somnium,
yeah.
Axie Infinity. Well, guess what? That shit's like super slow in Dino Tech, right? Like you guys
Yeah.
can't even like you guys can't even like transact over there, right? Well, guess what? We're building metaverses over here on Binance,
Yeah.
and it feels like a real video game, because the fees are so cheap,
Yeah.
and they're gonna cook up this marketing campaign, these narratives, and people are gonna buy into it like crazy, and it's gonna, these projects are gonna explode.
So then our long-term macro prediction is, yeah, these projects are going to do very well in this bull run, right? Like we've seen in the Binance ecosystem, a ton of mirrored projects, right? The exact same copies of the Ethereum protocols on Binance. They do like 100x within their ecosystem.
Mm-hmm.
And so our macro prediction is the same thing is going to happen with what happened with 2017, where Ethereum ends up just like rising to the top again. And after this bear cycle goes through, we're gonna see Ethereum just rise to the top, and all these other protocols are just gonna be like left in the dust with like little to no users, and all the innovation happening on Ethereum.
Yeah, I think the innovation will for sure like always come from Ethereum, but it's not to say like whatever communities these new chains, these new ecosystems form, maybe this is the time where the user base doesn't just flee.
It's
Maybe
possible.
maybe we build good enough products on all these alternate ecosystems to actually like retain some of that stickiness. Like
Yeah.
like I said, they're building metaverses and other chains, and
But we got to remember, Ethereum is also evolving too, right? They're going to go to ETH 2.0. It's going to be proof of stake. The fees are going to be less, not nothing, but a lot less.
mm-hmm.
And it might be easier to transact on Ethereum than what we're seeing today, and that could be the avalanche that Ethereum needs in order to like have that retention and not have like wandering eyeballs into other
Yeah,
projects.
that's true. But also remember the narrative of today has changed a lot. There's no more Ethereum killing in
Yeah,
anybody's
there
mind.
isn't. There's
Everyone's
Ethereum bridging now, not killing.
now it's Ethereum bridging,
Yeah,
cross chaining. These are the big buzzwords of today.
that's
So
true.
it's yeah. So it's going back to mirror protocol, which we need to start diving into. It's just this is like one of what we think is going to leverage, like I'm saying, like they have a clear competitor in synthetics, right? That's sitting around like a 3 billion market cap. So clearly there's a lot of upside to this protocol and this, a 10x differential essentially.
Yeah,
And synthetics we think is already super undervalued
yeah, for
considering
sure.
what it aims to do. I mean, synthetics mirroring real world assets into the blockchain, dude. For one, it gives these assets like a much more like real trading environment, right? As opposed to like this Wall Street sentiment, like where things like sentiment can only build from 9 a.m. to 4 p.m. or whatever it
Yeah,
is.
yeah,
Doesn't make any sense, right? Like these should be globally traded assets. The whole world should be allowed to speculate on them. And sentiment obviously doesn't have like a clock in time.
yeah, yeah.
Like just because Wall Street wants to go home,
And like rest. Yeah,
rest or party, whatever the fuck they do over there,
yeah,
like doesn't mean the speculation ends, right?
yeah.
So it's going to be up to these protocols to like bring these assets into a true market environment where like there's actual sentiment 24/7 for
Yeah.
these things.
Yeah, for sure. Yeah, I could see a scenario where the stock market like leverages and implements these mirrored assets as, like a sister avenue for trading stocks all, 24/7. This could be like a native action by the stock market to implement these types of technologies so that, they're just going to make more money, right? Instead of making money from 9 to 4, they're making money from, 24 hours a day.
Yeah.
And I think we could see a transition. I mean, there was an article that we were just reading where they talk about how Gen Z is going to be leveraging this mirrored app, right? Very similar to Robinhood, and they're just going to be trading mirrored assets all day like it's no big deal.
Yeah, I could totally see that happening. I think.
I remember for the longest time, I wanted to buy stocks when I was, in college, and it was like extremely complicated to buy stocks. I was like, dude, what the hell is this? And then all
Yeah,
of a sudden, like, 10 years later, 5 years later, Robinhood comes out and it's just like an app. You just connect your bank and you buy the stocks and that's it. Like, that's how simple it should have been.
yeah, essentially that is how simple it is usually to transact cryptocurrencies in a lot of senses,
Yeah, it is.
So they brought that same like vibe, that same energy to the traditional equity market,
Yeah.
which fucking worked. It was a jackpot for them.
Yeah, that's what largely propelled the GameStop craze is through Robinhood.
Yeah.
And you had a meme stock, right? The first meme stock ever, right?
Mm-hmm.
And and it just completely tanked a hedge fund. And so that's the power of like the masses, and that's what Mirror tries to do is it makes these assets easily to obtain.
But by doing that, there's a lot less. I mean, if you bring these assets into a decentralized environment, you're getting rid of all of the traditional regulatory requirements to actually like participate in that speculation, right?
Yeah. So what are those regulatory requirements, right? Centralized custody risks, right? And so to reduce those risks, there's a whole lot of regulatory aspects associated with that. So they remove that because it's decentralized, right? Mm-hmm. Less fees. There's no KYC or AML hurdles for any of this. And then that's the point of Mirror is that they just get rid of all these problems. And now anyone in the world can own these mirrored assets. Mm-hmm. And one of the functionalities to this is that you can stake your ownership, right, of your mirrored assets for a yield.
So that's a big deal because it's one of the things you're missing out on, right? By buying like a synthetic version of an asset. I mean, the true version of a stock, right, is to have ownership in a company. That's the purpose of of shared allocation.
Right.
So the reason why that's considered security, right, is because you're kind of like there's an understanding between the company and the purchaser of these shares. Like it's like a revenue share model, right?
Yeah.
So when you're buying that synthetic version, you're not getting any of that allocation. You're just
speculating on the price.
Yeah, you're using oracles to get that pricing data on chain, and then we're just speculating from the outside. You know what I mean?
Yeah.
But we're creating our own way to kind of like generate our own yield by owning these assets, right? Yeah, we're not getting shares and dividends from the company directly, but with these mirrored assets now we could like implant them into our own DeFi ecosystem to generate like passive yield.
That's right.
Maybe even better yield than these these dividend payouts.
Yeah, imagine if you buy a stock and you're buying that stock because you believe in the company, like let's say Tesla, and Tesla is dominating the car industry right now, and Tesla's price is going down, but you're not going to sell because you believe in Tesla. Why not stake that mirrored asset into a staking protocol to earn 200% APY, annual percentage yield?
Hell yeah, dude.
Yeah, if you could just multiply your holdings just by holding it, I mean, you're going to hold it anyways, right? Just multiply it.
Yeah. And that's kind of like the big selling point of DeFi and, this whole thing we're building here, dude. There's just so much opportunity,
Yeah, and because this is decentralized, there's sort of a voting mechanism to start adding different assets, right? Right now, you can get Tesla, Twitter, Netflix, and all these other companies as a synthetic asset that you can stake and yield. So to me, once this becomes like a Robinhood app, this is going to be like a no-brainer for the Gen Zers out there to start leveraging. Instead of buying stock, you're buying synthetic assets.
Yeah, and you have like a direct interface or a direct portal to, freaking yield farm.
Yeah.
with your stonks. Like you already know Gen Z is going to eat that up.
Oh,
dude.
for sure.
Sure.
It's like I'm getting 150% gains every year, bro.
Especially if we can memify like the experience of yield farming. If we can incorporate that into
Yeah,
their apps, where it's like, look, yeah, and if we can incorporate them into like video games, even like in NFTs.
yeah,
If we could start, you could stake your stonks into like your NFT, and therefore your NFTs get more power and strength, and
right.
therefore like you're gonna kick harder ass in your game. There's all kinds of weird things we could do with these assets. That
Yeah,
didn't exist before, and that will appeal to these Gen Zers. And like without even knowing, like by participating in the blockchain gaming ecosystem, you're like a top tier investor. You're securing your future wealth just by gaming, shit like that.
yeah, yeah,
Like this is only possible in blockchain, and it's all gonna merge at some point. All these instruments. You know what I mean?
yeah.
They're
Just
just
like any other decentralized product out there that we've seen, there's ecosystem participants, right? In this case, are traders, minters, liquidity providers, stakers, and Oracle feeders.
yeah.
So what pegs the Tesla price to its synthetic version is an Oracle, right? Just like we've seen with Chainlink and other oracles that we've seen out there. I think they've implemented their own Oracle just because they're on Terra's blockchain as well as Ethereum's blockchain. So
I think either they have their own Oracle. I think I've seen some articles them using Band, another big, Oracle out there. I mean, there's a whole Oracle market now in existence. So
we keep talking about this word composable, which is like the Lego blocks. Imagine you have a Robinhood app with a bunch of DeFi protocols, and one of them is to be able to mint synthetic assets. So this is fundamentally important and unique to the blockchain space, is that you're able to build these protocols and then make them composable so that any developer out there can implement your tech into their app, or in this case dApp.
mm-hmm.
But this is the innovation that, when we compare 2017 to 2021 now, and the whole sentiment that a lot of these projects that are doing a price run up right now are because they're competing with Ethereum, or because there's a counterpart to Ethereum's protocol on a different chain with a lot more frictionless experiences. And that's Mirror, and Mirror has like the same functionality that Synthetics has, but it's on Luna. So now we're starting to identify, for the next craze, the next like kind of sector in the blockchain space that's going to do its run. Like it could be the protocols that are on Ethereum on different blockchains. And ultimately that's sort of the pattern that we're trying to kind of identify here.
Yeah, you really want to find patterns before they catch on, right? Like that's the whole.
Yeah, because otherwise, if you don't find those patterns, you end up running into something that looks like this, right?
Uh-oh.
Yeah, since December 2020, it's done like a 90x.
Yeah. So yeah, actually, yeah, a good time to at least like hypothesize what we're talking about today would have been December. Like, okay,
Yeah,
we saw what happened in summer of 2020. Ethereum DeFi exploded. So potentially all these other chains that are in construction can kind of mimic that activity and replicate it. And
yeah,
what we've seen in the last 3-4 months is exactly that, and that's exactly what's happening. A lot of them have the exact same like infrastructure, ground DeFi primitives. The stable coins, the lending protocols, the borrowing. This is like base layer DeFi,
yeah,
and you add on these Lego blocks, like you're saying, on top of that from there.
yeah.
But if you already understood that 4 or 5 months ago, yeah, you caught these mega runs, right? But there's still some mega runs to happen. Now the mega runs are going to happen in the actual Lego blocks themselves.
Yeah,
You know what I mean?
that's right. That's right.
Which Mirror Protocol is one of those blocks.
Yeah.
So that's the potential there that we're tapping into.
So we're going to be going into different blockchains with their different protocols that are starting to leverage the new technologies in the blockchain, such as like gas fees that are not $80, right? So that's going to be kind of the next sector that we focus on. We do want to go into Barn Bridge again, so we'll do that video pretty soon.
Yeah, keep saying that.
Yeah,
we'll get there. We'll get there, Barn Bridge.
But all right, guys, hopefully you guys enjoyed this video. Like and subscribe, comment, tell us what you think about Mirror, and follow us on Twitter at The Block Runner and also at MetaZone.io, and we will catch you in the next video.
Peace.